Hello, everyone. This is Ilan. How are you all? It is 8 a.m. here in Austin, Texas. Not quite sure where the rest of you are in the world. I hope you can hear me okay. Uh, it's a Veterans Day here in the US. I'm not sure if the rest of you are celebrating that. So in fact, I'm giving this presentation from home today, interestingly enough. So I hope I have enough bandwidth. And I hope the kids don't come running into my office screaming and shouting. If they do, I'll just mute myself, and then Errol can take over. I do have Errol and Yvette on the line with me. Um, this is, if you can hear me, please let me know, because I don't have any feedback right now from anyone. Let me know. Yeah, okay, thanks, Jim. You can hear me. Good, good, good. Thank you very much for that. Sometimes it's difficult, in a webinar, you're just talking to yourself. So thank you for that. So I do have Errol and Yvette on the line with me too. They're going to be helping me answer some questions. This is an absolutely massive webinar today. In fact, I don't think I've seen so many registrations for a webinar in my life before, maybe once before. So obviously, I'm hitting on a sore topic today, which is setting market appropriate stop loss and take profit levels using Autochartist. So Yvette, Errol, I am going to have to depend on you to answer some questions, maybe the more kind of technical questions that come through, because they're just going to be streaming through with hundreds of people in the webinar today, and I won't be able to keep track. And maybe you too can make a note of the questions that you think you want to highlight. So up front, I do apologize immediately up front if I don't get to answer your question. With hundreds of people in the webinar, sometimes it's difficult to get to everybody. However, please do feel free to send an email to our support desk. Let me try and send a chat to everybody to let you know what our support desk email is. There it is. You should have a chat from me saying support@autochartist.com. If you do have a problem or didn't get to your questions, please do let me know. So with that being said, I think I'll just hit the record button and get going. Okay, good morning, everyone. This is Ilan Asbel. I am CEO, currently the CEO and one of the founders of Autochartist. I'm absolutely delighted to be with you here this morning. Well, it's morning for me, to talk about setting market-appropriate stop losses and take profit levels. So Autochartist services hundreds of thousands of retail customers and traders around the world. Actually, not only retail traders, professional traders too. The number one question that we get asked almost on a daily basis is which instrument to trade and in which direction. That's obviously the most common question we get asked. The second most common question we get asked is, where should I set my stop loss? And that second question is the thing we're going to be dealing with today. In fact, many professional traders will tell you that entering the market, how you enter the market sometimes is irrelevant. How you exit the market is sometimes the difference between being a successful trader or being a failure in this industry. So let's talk about that. And when we talk about setting market appropriate, sorry, Michael, just to answer your question, yes, I have two windows overlapping. It's a web browser as well as a MetaTrader in the background. Yes, that's two windows overlapping. That is correct. Okay, just in case someone was wondering. And there's a reason for that, and I'll get to it. So when we talk about having market-appropriate stop losses and take profits, we're talking about looking at the time of day around which to trade. Now I better switch my Skype off because people are just going to be bothering me all the time. I apologize for that, everybody. Okay, there we go. Sorry, I forgot to switch my Skype off. So which time of day to actually trade? Many people don't really understand how important that question is. And let me actually show you how important that question is. I'm going to quickly click on this volatility analysis section over here. Please keep in mind that for this demonstration today, my Autochartist has been set to Europe London time. I'm highlighting that for you on the top right hand side of my Autochartist. Okay, so I'm set to Europe London time, and I'm going to show you how euro dollar trades throughout every hour of the day. So on the bottom axis here, you can see this graph. On the bottom axis is the hour of the day from 0-100 hours through to 2300 hours, right? That's 24 hours in the day. And this the y-axis over here is the amount of pips, or the amount of price movement we expect on euro dollar. Okay, so let's have a look at this graph and see what it's telling us. It's telling us that if I'm trading at London, right, the average market movement to be expected at 8 a.m. London time is 40 pips. Okay, let's look at another example. 1 o'clock London time, which is the open of New York. The average market movement to be expected is somewhere between 40 pips and 45 pips. Now, why is this important to you, right? This is important to you because I'm sure, like most traders, and many of you included, have heard a lot of education, a lot of educators, and read a lot of text about setting stop losses. And you must set a stop loss when you're trading, and don't forget to set a stop loss. But no one ever guides you with respect to how far away to set your stop loss. Okay. Now, some of you may go out into the market, and maybe you're trading euro dollar, and you trade during the US Open, right? That's 1 o'clock, 2 o'clock London time, 8 a.m. or 9 a.m. New York time, and you've decided for some arbitrary reason to place or to use a 20 pip stop loss. Okay, a 20 pip stop loss. Let me draw a line across my screen for a 20 pip stop loss. A 20 pip stop loss is not appropriate for trading 8 a.m. or the open of the US time, right? It's not even appropriate for trading the morning of London time. Right? If you use a 20 pip stop loss during any of those times of day, you're going to be in the market for 10 minutes, and then you're going to get knocked out. And then I know what's going to happen. You guys are going to pick up the phone or start a text chat to your broker saying, hey, you're chasing my stop loss. You're chasing my stop loss. You're going to blame it on the broker, when in fact there's no one to blame except for yourself for setting an inappropriate stop loss level. Okay. Now, this is very, very important again, because what you don't want to do is you don't want to get knocked out on your stop loss because of market noise. Right? What you want to do is you want to hit your stop loss if you've made the wrong projection. Then it's fine. Look, you thought that euro dollar was going to go up, but it actually went down. But that's fine. We can only expect 55 to 60% of our trades to be profitable. Okay, so it's fine to make a loss sometimes, right? It's absolutely fine. In fact, it's okay to make a loss a lot of the time. But what you don't want to do is you don't want to make a loss because of market noise. You want to make a loss because you actually made the wrong projection, right? It's two different things. Similarly, you don't want to just make a profit because you happen to guess in the right direction. What you don't want to do is you don't want to make trading a flip of a coin. You want to try and skew the stats in your direction, right, in your favor, right? So even the most professional traders in the world are only making profit 55 to 56% of the time, right? But that little 5 or 6% edge is the thing that makes them successful, okay? So again, everything is about skewing the stats in your direction. So Jim just asked me how many hours difference is there between Austin and London. Jim, there's actually 8 hours difference between. Right now, there's 8 hours difference because the US just came out of daylight savings. So right now, there's 8 hours difference, I think. Oh, maybe 7 hours difference right now between Europe and London. Sorry, I'm getting confused. We just came out of daylight savings. Okay, so let's look at another pair, right? This is euro dollar, right? Let's look at a different pair. I'm just going to erase all my drawing objects, and let's look at USD JPY. I'm just going to wait for that screen to come up on your side. Okay, so for some of you that are trading USD JPY, let's look at what we're looking at here. Okay, so USDJPY trades a lot, again, as you could have guessed, during the open, kind of the first half of the day, first 3-4 hours of the US session, right? So 1 o'clock, 2 o'clock, 3 o'clock London time is when USDJPY trades a lot. Wow, that is surprising. I'm sure it should be surprising, because the first time I saw this, I couldn't believe it. I had to rerun the numbers. Okay, what does USD JPY have to do, you know, with midday London, right? In fact, what you would expect, actually, if you look at this here, this is the opening of the London session. This is the opening of the US session. Why are we getting a lot of trade during the London and New York session, just like we did for Euro USD? With Euro USD, you can understand it, right? Because it's Euro, which is the European session, against USD, which is the US session, right? So it kind of makes sense. But USD JPY kind of doesn't make sense, right? It's not what you expect. But what you all need to understand, which is very important to understand the structure of the Forex market, I would say the capital of the Forex world is actually not New York, right? It's actually London. Okay, so what ends up happening is that a lot of the clearing and the big institutions actually do all their clearing and their trading during the London session, right? Or very early on in New York. As soon as they wake up, they clear all their trades that happened overnight, etc. So you see, that's why you get a lot of market volatility during the open of the US session as well. But isn't that so interesting that you would think that trading the Japanese yen, you should trade during the Japanese time of day, but in fact you're getting a lot of volatility during the London Open, during the US Open. Okay, and yes, you do get some volatility, obviously, during the very, very early hours of the day in London, which is kind of midday in Japan, but certainly not the kind of volatility you would expect, right? I would have expected the volatility to be up here, right, comparable to the US Open, but in fact it's not, which is very interesting. Let me erase this and try and show you a different example. Not GBPUSD, sorry. I wanted to show you GBPJPY. Okay. Now this is an interesting one, right? This is probably something you didn't expect to see, right? Let's look at this example more carefully. This is pound against yen, right? And as you can see, we have a sustained area of volatility throughout the European session, okay? And a little bit of increase during the early morning of the Japanese session, right? But a sustained level of volatility throughout the US session. But this pair itself, GBPJPY, is no doubt the killer of all new traders in the market. It seems to be very attractive, right? Because look at these pip movements that we're expecting for every hour of the day. 40, 50, 60 pip movements in every hour of the day, right? So you're thinking, wow, this is an awesome opportunity to make money. Yes, it is. However, it's also an awesome time to lose money, okay? So if you're new into the market, do not trade GBPJPY because you are going to hurt yourself. You will lose your money. It is an extremely volatile pair and extremely dangerous to play. If you want to trade it, that's great. But give yourself some time. Keep watching it. You know, trade a demo account for a little bit on GBPJPY before you start trading a live account. Okay, on GBPJPY. Okay, so I've shown enough examples. Let's get down to actually looking at you know, real time, how to actually place your stop losses to market appropriate levels. So whatever instrument you've chosen, at the top of this volatility analysis section in Autochartist, there is a graph, right, which we lovingly call the trumpet at Autochartist, because obviously it looks like a trumpet. And this is really the key to being smart in terms of setting your stop loss and take profit levels. Now, what this is that it gives you a projection of the instrument you're looking at for the current time of day and the current day of the week, right? So this is not a summary of GBPJPY across all the hours of the day for the last 6 months. This is actually right now on a Wednesday, 2 p.m. in London. What can I expect GBPJPY to do? Okay, so in the next hour or so, I expect it to trade between 186.58 and 187.13. Okay, so if I'm trading GBPJPY right now and I place a position in the market, then this is where I should expect the price to be in the next hour. Similarly, this is where I should expect the price to be in the next 4 hours. And this is where I should expect the price to be in the next 24 hours. Okay, so what is this doing? This is actually projecting market volatility, and I'm going to show you how interestingly it actually corresponds to some turning points in the actual market itself, and that's where I'm going to turn to the MetaTrader window in the background to help me along with that. Okay, so let's look at another example. Maybe some of you are actually sitting on some trades right now. If any of you can give me a chat, are any of you sitting on any trades at the moment or looking to trade anything right now? If you are, let me know in the chat window or in the questions window, and we'll have a look at that specific example. This is Euro USD on a Wednesday. Okay, Fidel, thank you for that. Fidel, you're looking at Euro USD at the moment. Here is Euro USD chart for the next few hours. So firstly, let's look at 2 p.m. London time. So 2 p.m. London time, you're looking on average at around 35 to 40 pip movement. This is the little area we're looking at, 35 to 40 pip movement. And the light green area around the dark area is 1 standard deviation. For those of you who know a little bit about stats, you know what that means, but essentially it means that there's a 67% chance that the movement will be between 45 pips and 25 pips. So Fidel, if you are in euro dollar at the moment and you plan to hold your position for more than an hour, chances are you should be setting your stop loss more than 45 pips out of where you are at the moment. because that's how much this instrument is going to trade right now. And let's actually have a look at specifically right now, for the next hour, right? So that means by 3:15, right? By 3:15 London time, right? That's in the next kind of hour or so. We think that euro dollar would trade between 1.07, 06, and 67. Okay? So if you're about to take your kids to school or fetch them from school or something, and you still want your position to be open, set your stop losses and take profits out of this range, right? Okay, so that's very important. So let's look at Simon. Simon was looking at GBPUSD. Let's look at what's happening there. GBPUSD. GBPUSD. Okay, so Simon, where are we right now with your trade? You are over here. Okay. Now you're looking at like a 30 to 35 pip movement, expected price range movement on GBPUSD right now. Except now, keep in mind, look what's going to happen in the next hour. From 3 o'clock, right, in about 40 minutes time, you're expecting a lot more volatility to come into GBPUSD. In fact, on average, it looks like almost 10 pips more on average, right? And your standard deviation moves up to about 45 pips. Okay, so you are going to be expecting a lot of volatility coming up in the next hour or two on your trade. Now, you've got to keep that in mind, because if you set your stop losses too close, you are going to get knocked out of the market. Okay, if we're looking at, you know, the specific trade right now, let's look to our trumpet. In the next hour, you're looking at GBPUSD trading somewhere between 51.66 and 52.12. Okay, and a massive jump in the next 4 hours between 51.47 and 52.31. Okay, so keep in mind, Simon, I'm actually glad we looked at that one right now. You are going to be expecting a lot of volatility in GBP in the next 2 hours or so. And Simon has asked a follow-up question. How is this determined? So Simon, what we've done is we've actually gone past are these prices in? Okay, so first I'll answer Simon's question, then I'll follow up with Jim's question. So Simon, this is determined by looking at the last 6 months of volatility on pound dollar, right? So what imagine what our computers are doing here at Autochartist. They're going and they're actually monitoring how much the price is moving, and what we do is kind of add up all the movements, right, tick by tick, up and down for every hour, every 15 minutes, 30 minutes, hour, and 4 hours, and 24 hours, and creating these expected price range movements over the last 6 months. And this is how we determine what we expect to happen in the next few hours, right? So this is based on historical volatility, okay? And Jim has followed up on a question, are these prices in dollars? Jim, these prices are not necessarily in dollars. These price range movements are the price of the pair, right? So this is the expected price of GBP USD, right? So this is actually the price of the pair that where we're expecting it to be, right? If you, maybe Jim, you're asking about maybe you're asking about these prices over here. This is in pips, right? So this, for example, here for GBPUSD, this will be in pounds, right? Because pounds is your base currency. Okay. Okay. So Simon has asked a follow-up question. So Simon, great question. Simon asks, does this take into account the day of the week or just the time of day? In fact, it does both, Simon. So what I have actually not shown you, which is lower down in the graph, is that we do provide also a breakdown by day of the week. So we can see, for example, that GBP trades less on a Wednesday than it does on a Tuesday. In fact, what you'll find for the major pairs, there isn't that much difference. There isn't that much difference because they're all traded quite heavily, but what you'll find is some of the exotic pairs, right? Let's say the South African rand, the Mexican peso, the Turkish lira, most of the emerging market type of pairs, they actually vary quite dramatically between times of day. And that's because the emerging markets have a very, very high interest differential between the countries, and they have double swap or triple swap days. Now, for those of you who don't know what that means, it basically means that those pairs on certain days, there's double charges, double interest rate charges for actually holding those pairs overnight. So what actually happens on the double swap or triple swap days, there's a lot of volatility in those days because people are getting in or out of those pairs depending on whether they're long or short, whether they're going to be earning the interest or paying the interest on those pairs on the overnight hold. So, but that's a complicated answer which we won't go in a moment. But for certain pairs, you can certainly expect a lot of difference. So let's actually look at an example. Do I have Zara USD? I wonder. I don't have. Oh, I don't have MXN either on this. Oh, this is a demo version of Autochartist. I don't actually have any much exotic pairs here, but okay. Anyway, so I think I've made my point. So Jim is saying he asked about whether the price in dollars because sometimes his price charts don't agree with Autochartist charts. Jim, it really depends which broker you get Autochartist from. Sometimes it could be a few pips off. That's because certain brokers, we use their data to generate our results. Other brokers, we use our own data to get the results. But they wouldn't vary greatly, maybe by a pip or two. Certainly, for the purposes of this presentation, in terms of setting market appropriate stop losses and take profits, these are indicative levels, obviously, because they're one standard deviation away. So, a pip here or there doesn't make a difference. I think the objective that I'm trying to get to is, for example, if you're trading GBPUSD and you're trading the Open of London, don't trade 15 pip stop loss, right? You should be trading a 40 pip or a 50 pip stop loss. That's what you should be actually looking at. So I think there's a big difference there, and a few pips should make a massive difference to your strategy. Okay, so let's now pop over to because I'm actually running out of time. It's already I've been speaking for 30 minutes already. Wow, time flies. Okay, so let me quickly switch to MetaTrader, and I'll wait for all your screens to update. Now, what we've got in MetaTrader, we've got a bit of a shortcut window over here, and let's just say, for example, first, before I say that, I'm all over the place this morning. Obviously need some more coffee. In MetaTrader, we have this thing called Autochartist Volatility Analysis indicator, and in fact, this Autochartist indicator is going to be changing soon. We're going to be providing just one EA, which gives you all the information. So instead of multiple indicators, but we'll update you with some communication on that soon. But essentially, if you drag and drop that Autochartist volatility indicator onto your graph, and actually, you know what I think? I think I should actually maybe just do that right now. So let me take that indicator off, so I can actually show you all how to do that. I take this volatility indicator, I drop it on. I'll make sure I allow DLL imports. I click OK, and then you should get these lines that come up on the right-hand side of the screen. There they are. Hopefully they come up on your screen too. And those are the expected volatility, right? So this is actually our trumpet. So you can see for the next 60 minutes, this is where we expect the price to be for the next 4 hours and for the next 24 hours. Right? So whatever you're trading now in terms of GBPUSD, you might be in a position at the moment. So Simon, this is your example, GBPUSD. You're in a position at the moment. In fact, sorry, we've spoken about Simon and Fidel's positions. Maybe we should speak about Demola's position. He says he's in Euro JPY. I wonder if I can actually show Demola's Euro JPY position. Oh boy, I don't have Euro JPY. Yeah, I'm sorry. Okay, Demola, I wanted to show Euro JPY. I don't have Euro JPY available on the MetaTrader that I'm running at the moment. So I'm sorry. Let's just stick to the GBPUSD example here. So whatever I'm trading, long or short, okay, this is where I'm expecting the price to be. Now, what I want to show you guys is how interesting the expected volatility is with regards to other market events. So look at this line over here, the 24-hour expected volatility. Look how absolutely beautifully it correlates to market consolidation that happened a few hours back, right? Look at this. Look at this line. I mean, one cannot argue that there's been market consolidation at 151.00, right? Flat. So in fact, the markets love round numbers, right? So if you look at 151.00, okay, so I drew the line here at 151.05, but you get the idea. This is a nice round number, right? And interesting, that is where the market volatility is expected to happen. Let's look at another example. Look at this example on the 4-hour expected volatility. Look at this consolidation period, right? Over here, it hit this point, turned around again, right, on the 4-hour. Right? So what I'm trying to show you is that these lines correspond a lot of times to previous market events. Look at the volatility for on the long side for the next hour, right? So look at this again, this market consolidation over here in the next hour. Look at that. I mean, you cannot argue. You just have to look at this thing visually, right, to understand the significance of these levels, right? So although these levels have nothing to do, the way we calculate them has nothing to do with these turning points, right? At these areas of consolidation, but for some reason, look how interesting enough they actually all correspond to each other. There's something in that. Okay, so if you're going long right now on pound dollar, right? If you have a long position, you got to watch this level at 152.12. You got to watch this level because, based on just a day or two ago, you're expecting consolidation there. You're either expecting a massive movement through this price, or you're actually expecting consolidation and a pullback at that price, right? So you've got to be watching your position. Right. Okay. So Simon said 152 would be awesome to get to. Well, that's great. So that for you. So if it gets 152, man, you've got to take your money. So Simon, I'm guessing you're long. Okay. So if you're long and the thing hits 152, man, I would definitely have a look at taking your money. And then if it breaks through 152, then actually maybe taking your position along again. Up to 152.31 or 152.73, but certainly at 152, I would be expecting consolidation on GBPUSD purely based on the expected volatility ranges that we're seeing, and as well correlated to the kind of consolidation movement that we're seeing on the left-hand side here. And I know that Errol and Yvette are about to stop me because I have gone way over my time. Well, not way over, but 5 minutes over my time. I hope I've given you guys some useful information. Please, it is very important to keep an eye on the volatility, the expected volatility. This is going to be the difference between being a successful trader or being an unsuccessful trader. You need to keep an eye on the volatility and set your stop losses to be market appropriate and not just based on some guess in pips that you decided on, one day. So please keep an eye on that. Please visit the volatility analysis section of your Autochartist application. You need need to keep an eye on this stuff. It is very, very important, and I hope I can improve your trading strategy based on this. Thank you very much, everyone. I hope you all have a great day, and good luck with your trading.